Welcome to Pressure Points. Our topic is Tesla's March quarter deliveries. We're going to recap the March quarter deliveries and then hit the pressure point, which is when will this storm pass? And the deliveries were ugly, down about 9% year over year compared to expectations of up a couple percent. That is about 387,000 vehicles delivered. They did produce about 12% more vehicles than they delivered. We'll get to that in just a second here. In the press release, the company did break out 3 reasons for the softness. First, they talked about the changeover to the new Model 3 in Fremont. I would put that in the category of something that could have a negative impact on production. Keep in mind, production was better than expected. The second is they talked about an arson fire in the Berlin Gigafactory. I would put that as impacting production. And again, production was better than expected. And then the third, they talked about some of the conflict in the Red Sea related to shipping. I would see that as something that does impact deliveries. And so I think that one of the 3 reasons to me kind of lines up with having an impact on deliveries, but that's the companies, how they're framing what's going on in the March quarter. From my perspective, I think there are 2 big things that are going on and one very small thing. The 2 biggest things are, I believe that this interest rate environment, I do believe that the higher cost, typically 10% more for the price of an electric vehicle at a 7% interest rate, that's we're talking about an average monthly payment for a Tesla around $750. It's a lot of money, and I think that that has having a negative impact on demand. The second is, I think that just some of the excitement related to EVs has worn off. And a year and a half, 2 years ago, I didn't fully appreciate how much that excitement probably caused a pull forward in demand. And specifically, somebody who would buy a car like once every 5 years, when you get excited about a new technology and want to be an early adopter, maybe you purchase a car at a 3-year interval, and that essentially pulls demand, which would have been in 24 or 25 into 22 or 23. And so I think that there is some of that factor going on here as well. So those are the 2 biggest drivers, which I attribute the soft delivery numbers to. The third factor, which a lot of people are talking about, is Elon's brand starting to have a negative impact on demand. And I think the net of this is probably a slight negative. And 2 things in motion here. Elon is, with one group of buyers, is distancing himself by his actions, is turning off a group of buyers. And I think there's probably an equal-sized group that is probably turned on by Elon and some of the things that he does, and they like that too. I think when you put those 2 forces together, it's probably a slight negative. And again, to force rank the 3 things going on, I think it's price. I think it's a pull forward effect related to some of the excitement around EVs, and then down further, but still third on the list, is some of Elon's brand in the U.S., because I think the U.S. numbers were particularly soft. So that's what I think is going on. That's just the setup. Now we're going to get to the pressure point, which is how long is this going to last? And so we've gone from, in the December quarter, the 23, they grew deliveries about 20%. Now we're at -8. The street going into this, before they had reported this, was looking for around 15-20% type of delivery growth for calendar 24. I think that number is going to be closer to 10%. And so when revisions happen, that's probably a negative in the near term for the stock. For next year, the street's looking for kind of similar growth rates for calendar 25, kind of that 15%. I think those are actually going to be just fine. And even if they're not, we're going to get closer to the point of this lower price vehicle coming out in 26, where in 2025, investors are going to be looking forward to that. So when I put all of this together, as far as is this going to pass? Is there something fundamentally wrong with Tesla? I do not believe there's anything wrong. I think that this story is intact. I think it's intact because I believe electrification is just a better way to move around. On top of that, I think autonomy is a better way to move around as well. And I think Tesla continues to invest and lead in that, whether car companies are slowing their investment. So this is a step back. I don't think we're at the bottom in terms of where the stock could go in the near term, as those numbers for 2024 continue to be revised downward, probably through when they report their quarter. And I do think on the other side of this, the company's going to come out in a good place. give a teaser alert to a future Pressure Point podcast. We're just going to talk about the FSD beta and how that's going. But today it's about delivery numbers. It was ugly. I do believe this, in fact, this storm will pass. And on behalf of Pressure Points, I'm Gene. Bye for now.